If you were born in the 1940s, 50s, or 60s, and you still own your home, there's a good chance your property taxes just changed, and almost nobody is telling homeowners this directly. Not your mortgage company, not your county, not even most tax preparers, because most of these programs are opt-in, meaning if you don't file the paperwork yourself, you keep paying the higher bill year after year, and nobody's coming to fix that for you. By the end of this video, you'll know exactly what kind of relief your state offers, how much it could be worth, and the one deadline that trips up more seniors than anything else. Section 1. The truth nobody explains clearly. Here's what most videos on this topic get wrong. Property taxes aren't set by Congress or the federal government at all. There's no single national law. Property tax is entirely a state and county matter, which is actually the important part because it means the relief available to you depends heavily on where you live, and most homeowners have no idea their own state already has a program sitting there unclaimed. Every state in the country offers some form of relief for homeowners 65 and older, but it comes in 4 very different shapes, and knowing which one your state uses changes how much money you're leaving on the table. Section 2. The 4 types of relief. Type 1. The exemption. This is the most common. The state or county subtracts a fixed dollar amount from your home's assessed value before your tax rate is applied. That range is usually somewhere between $10,000 and $75,000 depending on the state. Type 2, the freeze. Instead of lowering your bill today, a freeze locks in your home's assessed value the year you qualify. So even if your home doubles in value over the next 10 years, your tax bill doesn't rise with it. This is enormous in fast-growing markets and often worth far more over time than a flat exemption. Type 3, the deferral. This one postpones your taxes rather than eliminating them. The unpaid amount becomes a lien on the home, typically settled when the home is sold or passed on. Some states charge interest on deferred amounts, like California's program runs at 7% simple interest, while a few, like Vermont, defer at 0%. Type 4, the circuit breaker credit. This ties your relief to your income, not just your age, a credit that increases as your property tax burden grows relative to what you earn. It's designed to catch the seniors hit hardest: high taxes, fixed income. Most seniors qualify for at least one of these. Some states let you stack more than one. Section 3. What this actually looks like state by state. Texas. Homeowners 65 and older get an additional $10,000 exemption from school taxes on top of the standard homestead exemption, and a school tax freeze that locks in your bill the year you turn 65, even if your home's value keeps climbing. New York. The Enhanced STAR program can cut school assessed value by over $70,000 for qualifying seniors under the state's income cap, which sits just above $110,000 for 2026. Florida. Lower-income seniors can qualify for an additional homestead exemption worth up to $50,000, and some counties add even more for seniors who've lived in the home 25 years or longer. Illinois. The Senior Citizens Assessment Freeze locks in your home's equalized assessed value the year you first qualify, which matters a lot given how high Illinois' effective tax rates already run. Washington State. Seniors as young as 61 may already qualify for an exemption, with a separate deferral program available starting at age 60. Georgia. Some counties eliminate the largest single piece of your tax bill, the school tax portion, entirely for qualifying seniors under certain income limits. South Carolina stacks an additional $50,000 exemption on top of the standard homestead exemption for $100,000 in total protected value. This is not the full list. Nearly every state has something on the books. The point isn't to memorize all 50, it's to know that your state almost certainly has a program, and that almost certainly only turns into real savings if you file for it. Section 4. The deadline nobody warns you about. Here's the part that costs people the most money. These programs are almost never automatic. You have to apply, and most states only accept applications in a narrow window, often between January 1st and April 1st of the year you first become eligible. Miss that window, and in many states, there's no retroactive fix. You don't get that year back. You just pay the full bill and wait until next year to try again. If you're turning 65 this year, or you already have and never filed, the first call to make isn't to a tax preparer. It's to your county assessor's office. Ask them directly, what senior exemptions, freezes, or deferrals do I qualify for, and what's the deadline to file? Section 5. Common mistakes. 3 mistakes we see constantly. 1. Assuming the exemption applies automatically because you turned 65. It almost never does. 2. Only checking the state program and missing a separate and often more generous county-level senior exemption stacked on top. 3. Overlooking a freeze in a fast-appreciating market where it can end up worth far more than a flat dollar exemption. Closing/CTA. Property tax relief for seniors isn't a secret and it isn't new, but it is easy to miss because claiming it is entirely on you. If this helped, the most useful next step is a 2-minute call to your county assessor this week, not someday.